Right. So, what would you say to the person who has an extra 15,000, 30,000, 50,000 in their retirement savings, be it a 401k or an IRA or what have you? What would you say to that person who's thinking, I need to do something now? Stocks are low. Maybe I should invest now. What should I invest in? I don't know. What advice would you give to that person for their portfolio?
So the basic principles in that analysis basically say the sooner you start saving, the better off you are. So let's say you're 50 years old and you haven't saved any money. You're still better off at 50 than waiting to 60. So one is to start as soon as you can. The second thing is if you have money, I wouldn't take it out of my 401k. I mean, I would leave it in my 401k. But any dollars that you have, I just talked to a friend over this weekend about this. I believe in a diversified allocation. So if you have 15,000, I'd put a little in stocks, a little bit in bonds, a little bit in real estate, and it's all through mutual funds. Because it's hard. If you have small amounts of money, it's hard for you to actually buy a building, but you can put money into a real estate investment trust in increments of $100, and you're investing in the real estate market. So mutual funds, and I figure out how risky you want to be. I mean, what's your risk tolerance? If you're not a risky kind of guy, then I'd go more into bonds, less into stocks. But the whole idea is that if you spread your money, whatever it is, over stocks, bonds, real estate, and even stocks, small cap, large cap, international, domestic, it provides, I think, a return and a hedge against volatility. For example, stocks have really had a rough time recently, but the bond market has done well because everybody's gone this flight to safety, flight to security. Now, if interest rates start to move up, bonds will have a difficult time and stocks will do well. So the reason I prefer that strategy is because it's very difficult for people to hit home runs. Like I got into Facebook when it first came out. That's not a strategy that I think is transferable or that you can figure out as an individual. So the home runs, I think those are far fewer, far harder to manage and negotiate, and it requires timing. And so if people have money, I wouldn't put it all into a bank because you can't get the same returns. I'd do mutual funds and I'd spread it around.
And who do you read? Who are the financial experts that you enjoy reading, or the magazines or newspapers that you enjoy reading to get your source material?
So my everyday newspaper is the Wall Street Journal. Yeah. And the Wall Street Journal has become more and more like a general purpose newspaper. It's not just finances. And I find interesting articles on management of money, on investment of money, in addition to good news articles. So that's one. Smart Money magazine I read in terms of their strategies for the everyday person. In terms of books, I'm kind of a biography guy, so I'm reading about the CEO of Starbucks book, Steve Jobs' autobiography. I try to learn from smart people. I'm less strategy oriented in terms of I read about, it's not about GE, it's about Jack Welch for me. And so that's what I read. That's what I follow. And in terms of I'm really interested in new media too. So I'm following some of that stuff.
Well, Mr. Hudson, thank you very much. Really appreciate your time. Your phones are going off, so you got to get back to work.
Everything's going off. I apologize.
No problem.
Good.
Thank you very much for your time.